Well, it's very area dependent. I will give you an example. Look at Kylene, Texas. Look at Austin, Texas. Round Rock, Texas. We've actually seen an increase over the last 4 years, year over year. Small, modest, 3 to 4% increase. Look at Boise, Idaho. Look at Washington, Colorado State. These areas have been continually increasing throughout the recession. But if you look at areas like Las Vegas, Nevada, Arizona, South Florida, where they were heavily investor-driven, they probably still have a ways to go, in my estimation, at least double digits still. And I'm right there with a lot of other folks with properties out in these areas, and they're getting slammed.
All right, Dani, don't go away. We're going to get your advice for one of our guests in a moment, but let me introduce him first. That's Rick Fortage. His wife also live in Pass Christian, Mississippi, along with their children. They began building their dream home halfway through 2007. Then shortly after they moved into their home, their bank reappraisal came back lower than what they owed, thus putting them underwater like so many people now. Rick joins us live on the phone to share his story. Rick, thanks so much for sharing your story. Appreciate your time.
Well, thank you all for having me.
So once again, your dream home. You may be in your dream home right now. I'm not sure if you're at work or joining us from your home. But tell us, you must have been surprised when all this happened. Did you see any of it coming?
I really didn't. You know, I kept getting appraisals on the house, you know, prior to even starting building. I had the plans appraised, had it appraised when we first started building and get the construction loan, had it appraised when we were halfway done in December of 07, and had it appraised when we were getting the permanent construction as late as August of 2008. It appraised at $879,000.
Wow, $879,000. Looking back, are you glad you made that purchase?
Well, financially speaking, no.
Yeah. Well, I'm curious now, 2009, looking back, as we're looking at pictures of this beautiful dream home, what would you do differently?
Well, if I knew then what I know now, right, I would not have built the house. I would have put the money into the houses that I have and paid them off, and just probably buy a spec house that contractors are building now. They're, you know, similar to what I have now. It's a lot less, you know, 60 or 70% of the value. So
you find yourself underwater. A lot of people do. 1 in 5 homeowners, in fact, 20% of people that are homeowners find themselves in a similar predicament. What's your short-term plan? Well, my problem was really that, you know, within a 2-week period, the appraisal changed from $879,000 to $585,000. So I lost, you know, approaching $300,000 between August 6th and August 18th. I owed about $65,000 more on the construction loan than what the last appraisal was. So I had a lot of trouble trying to get that $65,000 financed. And, you know, that was as of June of last year. We moved in. About 2 weeks ago, I got the permanent financing for the second mortgage established. The bank decided to do it in-house, so they were able to do it. All right, Rick, your opportunity to speak with Dani right now. She is a licensed real estate agent. It isn't her full-time job. It's one of the many hats she wears. First of all, though, Dani, I'm interested in getting your perspective. You've heard Rick's story. What advice do you have for him right now?
Well, I had a little bit of audio issue here in Rick's story, but I did read it online before here. So let me go with what I've read so far, and Rick, if you could jump in with anything that I've missed. You're facing an issue that many of us are facing. I am right there with you. I understand how you feel, the decisions that you have to make in terms of what's best for your family. The very first thing I would advise you to do is ask yourself what's going to help you sleep at night, and whether that's letting the home go back and finding something else, whether that's sticking through the market. Figure out for yourself, where do you want to be living and where do you want to raise your children, because those are two important factors. Remember, when we looked at these charts in the beginning of this segment, we saw that the home price today compared to even the last recession would still have increased roughly about 28%. Over the long term, real estate is always a good investment. Real estate has never gone down over any 10-year period. So that's important to remember. The other thing to remember is that the bank is valuing your home. And bank values right now, in my view, mean absolutely nothing. Bank values are exceedingly conservative. They're using a number called a declining market value. And I believe that you had said you were in Pass Christian, Mississippi. And that particular area is a heavily declining market value area. That means that the bank is taking what your home is really worth and they're slashing it by some number in their computer. And every bank is going to be different. Bank of America, HSBC, Chase, they're all going to value your home differently. Different appraisers are going to value your home differently. That's not indicative of what the home is really worth, and it also doesn't mean that that's what you can necessarily sell it for. So I would definitely recommend anyone in this situation get an independent appraiser, come in, from the outside, find out what the home is worth, and make a decision based on that, and not based on what the bank is requiring or the
Danny,
bank is saying.
Hold on one second, because that's some good advice. But I also want Rick, if he has the opportunity, if you can hear him, to directly ask you a question. So, Rick, what question do you have for Danny?
Well, I could not hear her during that whole segment, so I'm not sure what she said.
Okay, all right. We seem to be having some audio difficulties. We will make sure, my promise to you, we get you the advice that Danny has for you as well. What I want to do right now as we work out the audio complications we're having right now is remind you that you can get advice as well on our website. I want to direct you to our special Road to Recovery report, which you will find on our website. And there's one particular section that I would really like you to check out. That's who is eligible for mortgage assistance. Here it is right here. Of course, the Homeowner Affordability and Stability Plan, it's designed to offer assistance, as you see right there, to as many as 9 million homeowners. However, of course, while we have mortgages at historically low rates, millions of families cannot get rid of the loans they are locked into. This will help you to understand who is eligible for mortgage assistance. Again, you'll find it on our special report, Road to Recovery, on CNN.com. Now, maybe you're unsure of what to do next, how to juggle the bills and avoid foreclosure. Again, we can help out. Click on the Your Voice button at the bottom of the CNN.com live player and submit your financial questions. And do stay with us. We're going to answer your viewer emails throughout our hour-long show. Rick and Danny, I'm hoping the lines are connected and that we can all communicate with each other. Rick, your opportunity to talk to Danny, who's in New York. Rick, what's your question?
Hi, Danny. Basically, the thing that's really got me is if I'm a homeowner that has an existing mortgage and I am in good standing on that mortgage, is there any assistance to help me refinance to take advantage of the current interest rates?
Mm-hmm. Yeah, I can hear you, Rick. It's nice to hear your voice.
Hi.
Yes, hi. There are things that you can do. First of all, if your loan to value does not exceed 105% based on the bank appraisal, and one of the things I had talked about when we couldn't hear each other was that the bank appraisals are going to vary drastically by bank, so you're going to want to shop this thing around. But the homeowners, you can refinance your existing mortgage if you're not above 105% of the loan to value. That means that you don't owe more than 105% of what the home is worth. Yes, you can refinance if the home value, it sounded like you were just below the jumbo market rate, would probably be in the low fives if you have good credit. So that's an outstanding rate. So you can do that through your existing bank. But what I would recommend that you do is go to a community bank. And the reason I suggest that is right now they're not having an issue with asset allocation and determining what the values of their properties are worth. They didn't do the subprime loan thing very much. And so they're offering a lot more assistance to people. The other thing is around mid-April at whitehouse.gov, you will be able to see exactly who to call to route your mortgage concern and issue through loss mitigation that is Fannie and Freddie backed. That means it's going to be a lot easier for you to get a modification without having to go through a full refinance if for some reason you don't qualify for that.
Gotcha. If the house value is over, like I went from being 75% loan to value or 76% loan to value to 111% loan to value, that difference of about $60,000, what can I do with that?
Yeah, then what you're going to have to do is not a refinance but a modification. So the very first thing I would do, I don't know if you've already done this or not, but you should call the loss mitigation department. And if the very first person that doesn't answer, that answers the phone doesn't help you, ask to speak with a manager. I've done it myself. And tell them that you are 111% LTV based on their appraisals, and see if there's something they can do to drop the principal. It's called a principal write-down. And if they believe that you're at risk of foreclosure or you have one of several loan types that's considered high risk, that could be a negative amortization loan, which is when you can pay less than the interest every month. If you have a subprime loan, they are willing right now to go through and back out some of the principal that you owe so that you are eligible to either refinance or modify the loan.
Okay. The one last question I really have is people who are in good standing with their loan, they bought a house a year or two ago, and they just decide to walk away because it's not the financially smart thing to do, is to stay with the house. Is there any other than a hit on their credit, is there any repercussions? Will their assets be seized and applied towards the difference of what it's sold at foreclosure and what they owed, or anything like that? Is there going to be any type of punishment or any way to stop them from having or getting to go buy another house, at the current market rates?
There is. Well, first of all, in terms of there being some sort of legal punishment, no, there's not. People are actually buying and bailing intentionally. I know that sounds terrible, but I'm watching it happen in the marketplace. I'm watching people blog about it. They're letting their home go and they're buying another one right before they go into foreclosure on purpose. So we have a huge moral hazard issue. That is a huge concern to a lot of people. I think that's why the poll numbers supporting these types of things are probably so low. But here's the good news for people that are paying their mortgage that don't want to see those people get into another mortgage and bring the market down. There was that debt that they owed, that $60,000, for example, in your example, would be forgiven by the government and not even taxed anymore. As of 2007, you would have been taxed on that difference. You're not taxed on it anymore. However, it is going to be incredibly difficult for those homeowners to buy a home in the next 7 years because a foreclosure on the record stays for at least 7. And all of the delinquent payments are going to knock that credit score down into the 5s, and those people are going to have a very difficult time in an already tight market getting some sort of new loan.
Dani, thanks for the advice. Rick, I know you have some tough choices ahead. Do keep in touch and let us know how you proceed, okay? Thank you, Rick.
All right. I thank y'all for your time.
All right. And again, if you have questions, you can submit them right now. Click on the Your Voice button at the bottom of our CNN.com live player, and we'll get you some answers.
A lot of people blame the current housing market crisis on greedy lenders and greedy mortgage brokers that made all these bad loans. And subsequently, that's why we're in this mess. Someone else that's being left out of that equation of taking some of that blame, and that's you.
You, meaning the consumer. That was an iReporter, Sean Cochran. He is a senior mortgage broker in Bolingbrook, Illinois. Recently sent us that entry. Joins us now live via webcam with his take on this housing market decline. Sean, nice to talk to you.
Nice to talk to you, ma'am.
So again, greedy mortgage lenders. You're not a fan of that label, are you?
Not completely, only because it's kind of hard to generalize and say that it was one group of person's fault about this whole mess we're in. I know that some lenders or brokers were greedy. I just wanted to let the American people know that it definitely was not all of us.
All right. Now, you, I know, have still been working in this industry, and in fact, you ramped up the hours you're working. You're working 7 days a week. Explain why.
Well, it used to be in 05 and 06, out of the 10 people I talked to, every 10 people I talked to, I could help 7 or 8. And now it's every 10 people I talk to, I can help 1 or 2. That being the case, and I have a family, obviously I have to work more hours in order to, I'm probably working 3 times as hard for about a third of the business is what that amounts to.
Tell us why you're only able to help just few right now, and how you think this new government program will shake out. How much of it do you even understand what's coming from the Obama administration?
Not a lot, only because we were all told that on March 4th it would be rolled out, just like the rest of the American public, that it would be rolled out. My fellow mortgage brokers and I were literally sitting in the office. We got there at 6, 7 a.m. in the morning on March 4th, waiting for our email to pop up saying what we can do. And basically what it said is, now you're going to have to wait till April 4th before you're able to price out any loans. We don't know the credit score requirements. We don't know... We just heard rumors, the 105% that the young lady just mentioned, but we don't know if there's going to be mortgage insurance attached. We really don't know anything. We've been getting a lot of calls about, hey, you know what, can we get some of this new stimulus money? And we've been having to tell all of our customers, you know, we don't know.
Yeah, you're talking
and
about
kind of just to sit tight until April 4th where we might know a little bit more.
So you're talking about the homeowner affordability and stability plan. You're admitting that you don't know much right now. You're now waiting. You've got April 4th circled on your calendar at your office. So what do you encourage people to do who are just anxiously trying to figure out whether or not they can refinance, whether or not they're eligible to make changes? What do you encourage them to do right now?
Sit tight. If you are... I can tell you this, the young lady just mentioned that you might want to try your community bank if you're a little above water. I work with the banks, being a wholesale broker. My wife works at a bank. Respectfully, I disagree with that. If you walk into a bank and you don't have a 680 credit score and you're at 100 or 94%, unless they lend FHA, the bank is going to tell you to jump in the river. And I can speak from experience with that. All I do is work with banks all day. A normal bank on your corner is not going to lend you 98, 99% of the value of your home if you're like most Americans and do not have, like I said, a 680, 720 credit score. You know, you're going to be in trouble. The broker, we can lend, FHA starts at 620, and we can go all the way up to 97.75%. You know, with FHA.
Okay, Sean, hold that thought for one moment. Dani,
sure.
As you just heard, I want to bring Dani back in because Sean respectfully disagrees with you. What do you have to say to that?
Hi, Sean. I appreciate that
Hi,
you
Dani.
respectfully disagree with me. You know, I work with a lot of brokers. I have family who are brokers, and I respect the fact that many of you are doing good things.
A lot of respect on this show. I like this respect.
There are a lot of brokers who are doing wonderful things to try and help a lot of people. There are a lot of brokers that have a reputation because of what they've done in the past that don't have that have not contributed positively to this environment. So every broker is different. With regard to community banks and so on, I am watching a lot of people who have, as you're saying, 680 or above credit scores, which I believe is what our caller Rick was in good condition, good shape in terms of his credit.
Sure.
He was also within the conforming limit, so that's why I recommended to him that he may qualify for a Fannie or Freddie back loan, like you're saying, FHA back loan. So he, I think, will have a lot more opportunity. He's going to have to do a modification instead of a refinance because of his loan-to-value ratio. So I am actually completely with you on that. With regard to what's going on with the Obama administration and when the heck we're going to get details on this plan, unfortunately, I heard this morning that April 4th date is now April 20th. And I've also heard that rather than coming directly from the government, it's going to come down through the lenders, because the lenders are going to be the intermediaries, as you know, between the government and the brokers, or the government and the consumer, to get this worked out. Sure. And so the lenders are going to initiate what they're willing to offer to every single broker that's working with them in the wholesale division, and they're going to give them the 31 DTI requirement, which we already know is going to be out there. So we have some basics of the plan, but how it's actually going to work, now I've heard it's going to be April 20th, and rather than being released on whitehouse.gov like it was going to be as of this morning, I'm hearing it's actually going to be released by each bank on the reports that the wholesalers like yourself get.
So, Sean, if that date is in fact pushed back and you're moving it on your calendar, what does that mean for you, and what does that mean for people that are waiting now to get everything, their financial houses in order?
Well, if Dani's saying April 24th, it probably means a month after that. But what it basically means is just we're going to do a whole lot of waiting like we are now. But as far as what I'm going to do with my calendar, all I can do is continue to take applications. As a mortgage broker, that's my job. I take applications. The people who I can't help, I put in a folder to the side and say, you know what, if something else comes along, I'll give you a call back. Now, that folder has grown exponentially only because I'm hearing so many things that we might be able to do. I've got a huge folder full of maybes and I hope so's. And, you know, they're calling back and they're wondering what we can do. Is just to answer your question, only thing I can do is wait until someone gives me something definitive that I can offer, you know, the American customer.
Right. Sean Cochran is a senior mortgage broker, having a little bit of a conversation and some fun also with Dani Babb out of New York. Thanks so much, and I want to remind our viewers as well that you can go to our website. It is the road to... well, you can go to this one as well, iReport. I want to highlight that as well. We're interested in hearing your stories through the iReport initiative. Tell us what your financial picture is. Share your financial plan. Again, that's at iReport.com. And I also want you to go online to find out more about the homeowner affordability and stability plan that we've been talking about for the last 10 minutes. You can find information on that and check your eligibility also on CNN.com. Rhode Island is suffering from one of the highest foreclosure rates in the country. Statewide last month, it had one foreclosure filing for every 1,102 homes. Within the state, foreclosure rates ranged from Providence County at 1 for every 860 homes to Newport County, 1 for every 3,720 homes. Stephanie Elam now joins us live from Portsmouth. Stephanie?
Hi, Melissa. Yeah, and you take a look at the unemployment rate in Rhode Island. It's above 10%, and it's expected to go higher. It's the third highest in the nation right now. So it's not totally surprising that when you look at the foreclosure picture, it is relatively high. So we have been out here figuring out what communities are doing to make things better. And right now, I'm joined by Richard Godfrey. He's the Executive Director of Rhode Island Housing. Thank you for joining us.
My pleasure.
So tell me, why has there been such a huge foreclosure issue in Providence in particular? Because the rest of the state is not as bad as Providence.
Well, Providence was one of the places where we saw the fastest home price escalation. And when that happens, things that go up fast can also come down fast.
So did this happen? This is something that predated what was happening in the mortgage crisis, correct?
We had a crisis before the mortgage crisis arrived, and that was an affordability crisis where in Rhode Island we had the biggest gap between what people could afford and what it costs to live here. So it was, we then led the country in subprime lending. So it was all coming down the pike.
So you're a little bit ahead of it then, because this revitalization program that's going on, and particularly this Olneyville section of Providence, this was something that started because the urban decay had already started infiltrating the streets, right?
Yes, and we've been working hard in this neighborhood for about 10 years, and we've invested probably about $50 million to bring the neighborhood back, and the good thing is that will still be here even after the foreclosure crisis moves on.
But beyond that, for people who are in that sort of situation where they're thinking they're heading toward foreclosure, what's Rhode Island Housing doing to help keep these people in their homes?
Well, we really have a three-prong approach. One is to help people who are in trouble or may be in trouble. And that's one thing we stress. Call us early, call your lender early, don't run and hide if you think a problem is coming along.
And then if you look around at the neighborhoods, like even right here behind us, you can see that we've got a house that's boarded up. It is definitely empty, neglected, and then just right next to it, the exact same house, and you can see it's redone, it's a new house, it's, it looks very nice, looks like someplace someone would love to live. So part of this plan is getting these new homes here, but if something is built next to an abandoned building, are people willing to come and move into the neighborhood, or are they still concerned about the situation of things?
One of the things we have here in Olneyville is a critical mass. We've now done about 100 homes that we have renovated and have new home buyers and centralized management. So these two are actually the next two coming along. So yes, there are a lot of people who are making the step, realizing these are bargains, and then also realizing that we can give them a loan to fix them up, and it will be a good place to live. We've got parks and other activities as well.
Well, that's the other question I had for you, because it seems to me it has to be more than just the house. You have to give a city an infrastructure to do better. And how is Rhode Island Housing helping that in this part of town?
One of the things that we have emphasized is what we call the Keep Space Initiative, and there are 6 elements: housing, open space, jobs, infrastructure, opportunities for religion and recreation, all of those things happening together. You can't just deal with housing in isolation. We also have a community safety initiative here and active recreation programs for kids, art programs. All of that coming together makes it a great neighborhood in which to live.
The Keep Space idea, is that something new that is just only found here in Rhode Island? What makes it so special?
We have been working in these neighborhoods for a long time and working on many of these elements, but with Keep Space, we sort of took the concept and said we all need to work together. So we have the Department of Environmental Management, Department of Transportation, Department of Economic Development, all working together, and also intradepartmentally. So in terms of tackling a neighborhood like this where there may be multiple issues, we have water resources, we have air quality, we have soil remediation, again, all working together to take a common approach to building a better future.
And how long do you think it'll take before this whole community is revitalized?
Well, it'll be an ongoing process. Communities are always growing and living. They never static. So, this neighborhood is already turned around. It's in high demand. People are buying homes. We had a new family put down a deposit today. So it's a constant work in motion. We've started 10 years ago. We could be here 10 years from now, but it's a work in progress always.
And do you have any idea off the top of your head how many homes you've been able to rehabilitate?
About 100.
About 100 so far?
Yes.
So, Melissa, if you hear that, they're doing some good work here, and despite the recession and the housing crisis, they're actually getting people into homes. And one of the things they're also targeting is making sure that these homes are owner-occupied, because in the 80s, there was actually a time when people were renting and they were renting the properties out. They lived elsewhere, so there was a lot of devastation because they didn't take care of it. The properties went to foreclosure. They didn't live there anyway, and that really decimated the neighborhood. So they're really bringing it back.
Of course, you're always caring much more for, most times you're caring much more for the home that you're actually living in. What Richard was saying earlier was fascinating. She was not just about building the home, it's about building the community. And I know you've met some members of the community who are there not for the short term. They're in this for the long haul to see the rebuilding 10, 20 years out.
Oh, definitely. We talked to a young couple. They're due to have twins any day now, and they're hoping that this will be the home that they'll live in. This is the foundation of their American dream. They just moved into the house about 2 years ago, and they are going to, 2 months ago, not 2 years ago, but he's lived here for 12 years. She's lived here for 5. They've watched the neighborhood change. They actually were watching this house when it was an empty lot, growing up into the house that it is now, and finding out that they didn't need to rent another bigger apartment. They could actually afford the home. So for them, they're saying this is where they plan to be. This is where they plan to have their kids grow up.
Stephanie Elam from Portsmouth, Rhode Island. Stephanie, thanks so much. Let's talk a little bit more about foreclosure and what's going on with foreclosure in Rhode Island. Here's a look at the 3 states with the highest foreclosure rates right now. Nevada has the nation's highest rate, followed by Arizona and the state of California. Let's bring in Dani Babb, once again, our economic analyst. Dani, as you know, we pose questions to you from our viewers that are watching right now at this very moment. And here's the question from Jacqueline, who wants to know, is this a good time to purchase a home? And if so, why? You've written a book about how there are opportunities to cash in right now.
Yeah, and then also what to do to rent them out later if that's what you want to do as an investor. It's an excellent opportunity in general, and I'll explain what I mean by that. We have insane amounts of inventory out there, so whatever you want is pretty much available. We have incredibly low prices. We have historically low rates. We have, if you have a good credit score and you have a down payment, outstanding ability to get a government-backed mortgage. So we have a lot of very good things. We have first-time home buyer credits of $8,000 per year if you hold the home for 3 years. There are a lot of incentives to do so. So buying, yes. Am I actively looking as an investor and an owner? Yes, absolutely. But there are also some things you need to be careful of, and we don't want people to go buy into areas that are still going to drop another 10 or 20% and lose a good portion of their nest egg. So here's what I tell people that are looking to buy. First of all, take a look at the jobs numbers. You can get it from, I believe it's city-data.com, and you can look and see if jobs are coming or leaving. And if jobs are leaving like crazy, like they are in California, it may not be a place that you want to buy into. Look at the tax base in that area. State taxes are directly correlated with people leaving, hence the reason they're leaving California, moving to Nevada and Arizona. So if the tax rate's really high, not a place you necessarily want to buy into. Look at the unemployment rate and see if it's going up above what the national unemployment rate is. So if the national unemployment rate is going up 1% and that state's going up 3%, that's not an area that you want to look into. Also, go to where boomers are moving to, which is Idaho, South Florida, even Nevada, if you can get a really good deal. Look at the Sun Belt states, which is where the boomers are going to go to in the future. And then look at industries. We know there's been a lot of support behind telecom and green in the Obama administration. Where those jobs are places you might want to invest in.
Okay. Here's another question from a viewer, and this deals with PMI. Thus, someone did not have the 20% necessary to put down when they were getting the mortgage. I'm paying PMI on my mortgage. If the value of my house went down, will it affect my loan to value? That's from D'Angela.
It does not affect your loan to value. What it does affect is your ability to get PMI removed. Once you hit the 80% loan to value ratio, the lender, if you can show documentation that you're at 80%, is required to remove that private mortgage insurance that you're paying every month as some sort of guarantee. Unfortunately, the banks have not been able to successfully collect on a lot of these anyway, so a lot of us consider it to be useless insurance. But if your value drops to 80% for anyone out there, you need to call your bank and ask them to remove that PMI. Even if, whether it happened because the value went up or you paid it down, it's your right to have it removed, but it does not affect your LTV overall.
Let me ask you a related question, because when you're buying a home, often first-time home buyers either have that PMI option or they do an 80-10-10 mortgage. If you have that 80-10-10 but you've lost value in your home, you may have lost that 10%. Now what to do?
Well, now you've got a second lien holder that does not have many rights to the property, which is why we see second mortgages and home equity lines of credit cost more money in terms of interest rates. They're always much more expensive than a first mortgage. 80-10-10 is an option a lot of us took. 80-15-5 with a 0% down is an option a lot of people took. Those second lien holders, if you're in a state of foreclosure, have really there's nothing that they can do if the house is lost. They lose their money. That's why they charged you more in interest to begin with. So if you have to choose between PMI or taking the 10%, it needs to strictly be a cost-benefit analysis for people that are out there buying. What is going to cost you the least amount of money? And then remember that the second mortgage interest may be a write-off depending upon what you're using it for, a tax write-off, which could help.
You mentioned if you're in foreclosure, that second mortgage, they really can't go after much. But what if you don't want to go to foreclosure? Is there any type of negotiation you can do at this point?
There is with the first lien holder. The second lien holders have not yet gotten to the point where they're negotiating a whole lot. The reason is they know they're going to lose it anyway, and you don't really have much incentive if you're at risk of foreclosure to pay them. So they're not negotiating as well as the primary mortgage holders are, unfortunately.
Got it. Some questions from our viewers answered right now. Once again, if you have questions about the housing market, about paying your mortgage, send them to us right now. Click on the Your Voice button right under the main video screen.
President Obama, you cannot forget about the average American citizen that has lost their jobs 13 months ago or more, and through no fault of their own are living the life of hell right now.
That was iReporter Patricia Lewis. She is facing foreclosure in her community outside of Philadelphia in Pennsylvania after her husband lost his job. They write that they've been able to keep up with their home payments. She joins us now live via webcam with her story. Patricia, thanks for joining us and thanks for sharing your story.
Thanks, Melissa. Thank you for having me.
I understand you've also had to dip in. Oh, no. I understand you've also had to dip into your husband's 401k. So you're essentially exhausting all the options you have.
We have exhausted everything. To go back a little bit, in 2004, I became medically disabled. So I did have long-term disability, thank God I paid for. So we did lose 50% of my income. I was a general store manager for a large furniture store. We lost 50% of my income. We were still 35% loan to income with our home. And we were doing okay, like middle-class America. And then January 2008, my husband lost his job of 18 years in information technology due to outsourcing. And he could not find a job for the life of him. I mean, it's been hell.
I'm curious if you've even been able to try to get away from that overwhelming feeling for a moment to try to craft a short-term plan, or at this point, do you just need really sound financial advice?
Well, we need our administration. Okay. First of all, they want this housing affordability and stability plan that they came out with will not help people that have lost their jobs. Now, with 70,000 people losing their jobs in February, and unless they have 2 years to have funds available that they can cash in, foreclosures are not going to stop. They're going to increase because people cannot find jobs. And the stimulus plan is great, but it will create blue-collar jobs right now, maybe in a year, 2 years down the road, maybe for the white-collar worker. And the link between unemployment and foreclosures is huge. And we do not fit into we don't want to fit into it. We don't want the government to bail us out. We want a job. But the fact remains that there's hundreds of thousands of people every day that are losing their homes through no fault of their own. Mm-hmm. I do not have an adjustable rate. I'm not one of those victims. I am not a subprime lender victim. I have a 6.1 fixed rate. But we've used every asset we had to stay responsible to our debt, and it ran out in November, and we got our letters of foreclosure in January. And we do not fit into that plan. And the thing is, there are state programs like HEMAP, mortgage assistance, which I believe you were speaking about earlier, and also HERO programs and things through HUD that are in each state. Now, if they utilize those programs properly and had it where someone that's unemployed, instead of doing a foreclosure on the home, have them as a mitigation department saying to the lender, okay, if you want to foreclose on this house, you're going to lose 25% immediately with legal fees, then a short sale sitting on the market for a year. So to stop these foreclosures from happening and to get our real estate to go back up and to get our economy boosting, utilize these state agencies that we already have in place.
Patricia,
instead of just focusing on subprime lending victims and adjustable rate victims.
I just want to say you've clearly done your homework, and it's obvious that you have ways that you would tweak the plan from the Obama administration. Oh, that is a lot of homework. You've also crafted some of that information online, I know, at helpsavehomeowners.org. What I want to do is find out where that rustling sound is coming from. I'm not sure if that's from Sean's mic, from Patricia's mic. There's the website I was referencing. I know it's not not my mic, but I'm trying to just see, because I know it can be difficult to hear. But I want to bring in Dani right now and see if Dani can offer you any advice. And she's been able to hear your story. They're both out of work. They've made sound financial decisions. It's not like they have an arm that's adjusting. They're just overwhelmed.
Yeah, we have. I talk with a lot of people, particularly by email, and I have a forum on my website where people go and try to help each other that are in this situation. And the very first thing I would do is call the lender and ask for a moratorium. And the reason that basically what happens is they freeze, but ask them to add it to the end of the loan. And so if you just call and ask for a moratorium, they're not necessarily just going to allow you to, they're going to give you 30 days more to pay your payment, big deal. What you need is a 6-month job loss moratorium. The big banks are doing it. I don't know if you have a big bank or not, but the big banks what they're doing is they're taking that 6 months and they're adding it to the end of the loan. So if the person that you talked to said no, talk with a supervisor and get that thing escalated to a level 3 support person if that's what you have to do. But get some sort of period of time where you can try to get back on your feet. That would be the first thing I'd recommend if you haven't done it already. Also, you should know that starting in April, the lenders are going to be incentivized with cash to help people like you. They're going to be paid between $1,500 and $2,500 to help people that have lost their jobs, put a delay in the time that they have to pay their mortgage payments. So that is a time period that if you've already gone through all this process, you'll want to do it again, beginning sometime I would start April 1st, but then continue every week through the entire month of April and see if they've got some sort of program in place. With regard to dropping your payment, if that's what you need to do, first of all, your disability income will count as income for a refinance. It is possible,
right.
I don't know how long you've been paying down your loan for, but if you have, say, 10 years left or 15 years left on your loan, if you're willing to refinance that mortgage to a 30-year loan, and it doesn't mean it's going to take you 30 more years to pay it off, because if you pay it twice a month, a 30-year loan becomes an 18-year loan. But if you can use the money that you're getting in disability and have that cover the same mortgage balance on a longer term, on a lower rate, because really you should be in the 5s if you have a decent credit score, or even in a modification, then that may drop your payment.
Just to respond to you, we had a 750 credit score until we were 2 months behind our mortgage, and we're now 515. And with what I made compared to what my husband made, it would actually be some kind of crazy lender that would let me do a refinance right now. And my lender, I've been talking to every 2 weeks since April 2008 to stay on board with them on everything. They will not hold off any foreclosure while they're deciding. They're AHMSI, which is, like a servicing company, the mortgage, and they will not put a stay on foreclosures. They are proceeding with foreclosures, I've been told, and they won't even decide if they're going to come on board with the President's plan.
Patricia,
now, what they did tell me, I'm sorry.
No, Patricia, we do have to wrap up this part of our conversation. I want to thank you so much for sharing your story and sharing the predicament that sadly a lot of people find themselves in as they have been paying their mortgages on time and find themselves unemployed. Dani, of course, we welcome your advice as well. Continue to stay with us throughout the hour. We're going to talk about one other story right now about homeowners in San Clemente, California. They're trying to be creative. They're finding creative ways to buy and sell as they ride out the recession. The latest trend, house swapping. This story from our affiliate KCIL in Los Angeles.
It was their Model 3 floor plan.
Dave Desiker of San Clemente is in the business of trading other people's homes. But with the current state of the economy, he's now hoping to exchange his own residence.
Well, we're hoping that we can do a trade on this property. Primarily with this one, we're looking to trade to Palm Springs to get a lower-end home, probably in the $500,000 range.
Desiker isn't putting the 4-bedroom, 4-bath former model home on the market. He doesn't want the curious traipsing through here, and most potential buyers can't get financing. So Desiker has listed his house on the website GoSwap.org.
This is the house here that we're in, and this one is under California, San Clemente, permanent home swap.
So far, 2 interested traders with properties in the desert have contacted Dave Desiker. He just put this house on the website last month. Desker recently traded his boat. He's hoping his house is next. He's been an exchange broker since the mid-'80s. For his clients, Desker has done about 30 trades. In this brutal real estate climate, home swapping is becoming more popular than ever.
And it's getting a little easier now because the people are more motivated. For a while there, it was very difficult because people felt the market was going to bounce back real quick. Well, it's not happening, and we don't see that happening for several more years. So right now, the only way to really make things happen is to do exchanges or trades.
Fascinating story again from our affiliate in Los Angeles, KCAL. The gentleman in the story talking about home swapping, but moving to a lower cost home in Palm Springs at around $500,000 and also possibly getting rid of his boat. That's a different situation that a lot of homeowners find themselves in. Dani, I want to talk to you about whether or not this home swapping concept is realistic for everyone.
Not for everyone. I talked about this about a year ago with the site onlinehousetrading.com, which was very active in helping the military families relocate quickly. This is a very viable opportunity if you're willing to if you've got some time, basically, to put into this. The trading process does not happen very quickly, but when it works very well. The reason I like online house trading is that they have a deal with Bank of America, because the hardest part of this is getting the banks, if you have two loans, to understand what the trade process is. Bank of America is already aware of what the trade process is, and they handle both transactions and make it pretty seamless. I'm actually very familiar with where his home is in Talega in San Clemente, and I have seen more and more people in beach communities trading for desert homes, sometimes 2 for 1, or I'll give you my 2 cars, my home, and trade it for your beach house. There are people out there that have a substantial amount of equity, particularly the boomers who are taking advantage of something like this, and it is viable, and it's something you should look at, and you should also look at Zillow.com, listing it by yourself rather than with an agent, and save yourself 6%, which in this market can mean the difference between your home being sold or your neighbor's home being sold.
Dani, another question for you from one of our viewers who's watching right now. This is not about home swapping. Here's the question. I'm about to be laid off, have no savings due to putting my kids through college, no college diploma, up to date on my mortgage, but I fear falling behind. Nancy says, is there any help for me?
Yeah, there is now. There wasn't 3 months ago. For people that, I don't know what type of loan Nancy has, but if it's a traditional mortgage, then the chance of getting it modified is pretty low, but the chance of refinancing it is pretty high, even up to 105 LTV. But if there is some fear of falling behind and there's any type of risky mortgage involved whatsoever, negam, subprime, negative, pay option arm, pick a pay, if you're with Washington Mutual, depending upon the loan type you have, a lot of lenders are now being proactive, and they will send you call them, call loss mitigation, tell them that you anticipate potential problems, you give them the documentation, you fax it over. Usually within 36 hours you will have a packet being sent to you via FedEx with all of the new terms in agreement. I have seen this happen countless times. In the last few weeks, the lenders are getting far more proactive, and there is more help out there.
Wonderful. Some help for Nancy. Now, all this week, we're on the road to rescue, helping you to survive the money meltdown. And one of the things that really surprised us is a new poll suggesting nearly 7 in 10 homeowners delinquent on their mortgage payments aren't aware of the help that is available to them. We had our personal finance editor, Jerry Willis, look into this for you.
I want to show you a timeline on how foreclosure works, because it's sort of a mystery to most people. Look, once you miss a payment, your lender likely reports that to credit bureaus. Your credit score will probably take a hit with every payment you miss. Now, after about 3 months, your lender files a letter of intent to file foreclosure or a notice of delinquency, and they send that via certified mail. Now, the letter will state that your home will go into foreclosure if you don't become current on payments. Then a formal foreclosure lawsuit, that starts 2 months later. It's hand-delivered by a deputy or a sheriff. This is the scary part, and it's where the legal process begins. In some states, it could take a year or more to have your home sold. In other states, the process is faster. After you miss a few payments, your home could be sold at auction within 1 to 6 months, although given the glut of homes in the market today, it could be a lot slower. I have to say, though, this varies with where you are. What we described here was a judicial foreclosure, and that, of course, is one that goes through the courts of law. In some places, these foreclosures occur in a month.
Yeah. So what options are out there for people?
Well, you know, you can get a loan modification out there. You can go to your lender and say, I want a new loan, a loan that I can handle, one with lower payments, a lower rate of interest. You're going to have to apply for that, and it requires that you do all the same things that you do when you apply for a loan. You've got to show all your documentation in terms of your income, whatever you owe to credit cards or anybody else. Now, I know a lot of people out there are having a hard time right now getting those loan modifications, but you should check out what the president is doing and what Congress has okayed with the Financial Stability Act. Go to financialstability.org .com to get .gov, that is, to get answers. This may help you get the loan modification you want. What I'm hearing, though, is that it's taking a while for these lenders to actually get it together and put these programs in place.
Yeah, me too. And so does the foreclosure process stop if you've made those steps to reach out to your lender, or are they totally separate?
Well, you can, stop the foreclosure process by getting a new loan, but you've got to get your lender to agree because it's the lender bringing the action. So that's the way that works.
If you've made steps to reach out to your bank, does that foreclosure process stop while you're trying to do that, or no?
You've got to get your lender to agree. They stop the foreclosure process. It's their lawsuit that they're bringing against you. So once you get them to agree to a new loan or some other kinds of terms for your deal, that means that you get a new loan. The foreclosure process goes away.
That was personal finance expert Jerry Willis offering her advice. And, of course, we're sharing your questions and sharing your comments as well. Holly, who's watching right now, writes, I'm so tired of these homeowners complaining about their current situation. They got into the homes they knew they couldn't afford, hoping that they could refinance, and it backfired. Too bad. So sad, Holly writes. Go and rent like all the other people who couldn't afford to buy a house and didn't. Let me bring in Dani once again. Do you sense more and more the growing frustration that people feel and how there's such anger toward people that they feel made really bad financial moves?
Yeah, I have a blog on thebabbgroup.com where people are writing in daily, very, very upset because they feel like we're part of the 91.x% of people that are paying on time and everybody else is getting a handout. My neighbor just got his mortgage dropped by $200,000. I'm still paying the whole thing, and this is just flat out unfair. That sentiment, I feel, from feedback I get, is rising incredibly. There's becoming a warfare between the people who are paying and the people who feel like the others are just taking advantage of the system. The key, I think, for everyone is if you are in trouble, the stigma has been dropped in terms of I'm going into foreclosure or I'm facing trouble. People don't, for the most part, don't have that worry about being stereotyped and so on. Ask for help if you need it so that everyone can have some sort of recovery in terms of prices, because this is going to continue to spiral until we all have price stability. I'm not a fan of bailouts. I am completely in agreement with Holly. Unfortunately, unless we get a price floor in here, this problem is going to continue to perpetuate, and we know that if the home next door goes into foreclosure, yours drops on average about 9% in value.
Let me ask you a question right now about where you see the market going. I know it's getting out your crystal ball, but everybody's weighing in and saying when they think we're going to see a change. Yeah. Ben Bernanke, the Fed chair, said the recession, well, could end this year, could end at the end of the year if banking is stabilized. When do you see the market bottoming out?
It's going to be extremely area dependent. I see the market already bottoming out in a lot of states, actually most states, but I don't see a bottom in the hardcore investor areas for at least a couple more years. So be very careful in South Florida, Nevada, California, Arizona. Those are the 4 states and Detroit also. You need to watch out for those areas. Also, I think we're going to see suburbia rebound much more slowly than urban areas. When urban areas were very expensive, people moved to suburbia because they were just willing to make the 45-minute commute to have a home that they could afford. We're going to see those areas take longer to rebound than we are urban areas. So stick with cities that don't have high job losses, and then I think you're going to be in much better shape going forward. In terms of actual numbers, that's very hard to predict.
Here's a question from a viewer. This is Trina, who wants to know about an adjustable rate mortgage. She says, if you have a regular arm that is adjusting, shouldn't the interest rate be lower?
That's a great question. It depends on what your margin rate is. So if your margin, let's say you have prime plus 3%, that means the prime rate, they're going to add 3%, that becomes your rate. Unfortunately, in many cases, that was an escalating number. So after 5 years, when the number reset, that margin value, that difference between prime and what your actual interest rate is, goes up. So if you have a 3, this is when we see 3-1 or 3/1, 5/1, 10/1 for ARMs. That means that after 5 years, that number and that interest rate is going to reset. Most of them are resetting, but if you had a very low teaser rate in the beginning, yours could actually be 3 to 4, even 5% higher.
All right. I have another question from a viewer right now, and I want to bring Sean back in to offer his insight as well. He's a senior mortgage broker that we spoke to about 30 minutes ago right now. Oh, I apologize. Sean is not there, but we'll get the answer from Dani. Nonetheless, this is from Michael, who writes, would a foreclosure be considered a good buy as a beginning real estate investor? Do I have to kick the old owner out if I do acquire the property?
Great question. No, the old owner will be kicked out by the bank or by court order. You don't have to do that. But here's what I would recommend so that it's a win-win. Don't buy it when it's bank-owned or REO, real estate-owned. Buy it before it gets there. So buy it in short sale. If you're working with a real estate agent, they can tell you which properties are in short sale. This means that it's not yet in full foreclosure, but the owner's very behind. The bank doesn't want to pay the $50,000 plus court fees it's going to cost to kick the owner out. They don't want yet another foreclosure on the record. The owner doesn't want to lose the house and have a foreclosure on the record, and you want a really good deal. So those four things coming together make an excellent opportunity for you to offer a short sale. That's where the bank, the owner, and you come together, make an offer on the property. You get a new mortgage to pay off the new balance. It's not going to be what that owner owes. It's going to be something lower. And it's a win-win for everybody. In some cases, as an investor, as you were mentioning, you can actually, what I've done is let the tenant live there, let the previous owner continue to live there for 2 or 3 years with even a lease buyback option. So when they get back on their feet, interest rates are lower and they have a job again, they can actually buy their own home back. That's just a double win. So if you can find those situations, you should go for it.
A double win because you would think he or she would want to have their home back.
They want to have their home back, and they want to not have the foreclosure on their record. And if you can keep it where they're 3 or 4 months behind but never went into foreclosure, you've helped their credit substantially. You've gotten yourself a really good deal. You've helped a family, and you're making money in the process. And that's an excellent opportunity.
We were talking earlier to Sean, the senior mortgage broker, and he was talking about how he's waiting, how he keeps moving the calendar date back to find out more about the program from the Obama administration. As we're all waiting, what do you encourage people to be doing right now? How to get that financial house in order so that they have all the paperwork ready when they can find out if they're eligible to refinance?
Well, first of all, hang on to at least 2 months of bank statements. So when they come in the mail, like if you're like me and you normally just toss them, hang on to them, scan them into a PDF file, keep them very handy because you're going to need 2 months documentation. Keep your last year's W-2s on file, last 2 years' W-2s, and keep a running tab of every single expense that you have every month, because one thing the banks are requiring, the modification process is pretty straightforward, but they want a detailed list. What do you spend on dry cleaning? What do you spend on utilities? They're going to want that thing down to the line item. So start keeping that now so that when the process is available, you've got everything ready to go. You can hand them the paperwork and get in the queue, because right now we have more people wanting modifications than new mortgages, and people that were on the brokerage and lending side have now been moved over to the modification side. The process is taking a long time. Speed it up and don't make them wait for you.
Dani, here's another question from a viewer who's watching right now who goes by the name of S. Thompson. My remaining elderly parent, this viewer writes, owns her home. What should I be doing now to plan ahead in a worst-case scenario to ensure that family home remains in my family?
Well, the first thing you should do is talk with a real estate attorney and find out how to get that home in trust, so that it's the trust owns the home rather than an individual. And this is something you'll want to talk with your parent about in terms of how to move the property around without paying crazy taxes, making sure it doesn't go back to the state. There are ways to do that, but a real estate attorney really needs to help you make sure that that is solidified so the government can't get their hands on it.
Thanks so much, Dani. Don't go away just yet. We want to encourage our viewers to continue submitting their questions because we focus on the economy and focus on your finances throughout the week here on CNN.com Live. Coming up, Elise Glick, she is a real estate and money expert. She's going to give us her insight into mortgage fraud, serious problem that industry experts say is on the rise. If you have a question for her, you're just joining us right now and logging on. Submit that question by clicking on the Your Voice button at the bottom of the CNN.com Live player. She's going to join us at 1:15 Eastern. If you consider news about the economy, the housing market, one big cloud, tomorrow we're going to bring you the silver lining. Success stories from across the globe, from small business owners who are thriving to people who have changed careers and launched startups, thus people who are reinventing themselves. And with their stories, of course, comes advice on how you can do it as well. It's all a part of our Road to Rescue week-long special, Wednesday at noon Eastern, here on CNN.com. And again, we love your questions. We enjoy sharing them live for you, making it an interactive feature here on CNN.com Live. So if you have questions for us on the economy, on reinventing yourself tomorrow during the noon hour, send them by clicking on the Your Voice button, again, right at the bottom of the main video player. And a thank you once again to Dani Babb. We appreciate your insight. Appreciate your advice for so many of the people that have written in and our guests as well. She's the author of Finding Foreclosures, also an economic analyst, and the author of this book as well, The Accidental Landlord. Dani, or Danielle Babb, thanks so much. Appreciate your perspective.
Pleasure.